Welcome back, Ben.
I'm going to go grab my tinfoil hat right
So
now.
you go hide
And
under
get
a
a cup of
rock,
coffee. I'll
Blake.
be back.
All right, everyone go to their bunker and turn this on. Ben?
Hey, Dale, how are you?
Good, buddy. So, everyone's pre-warned. The kids are out of the room. Tell us what we have to look forward to on the Epoch cycle going into year end.
Yeah, it's not great, but always, out of the ashes rises the phoenix, and that's the hope, and that's what we have to see. All transitions are, they're tumultuous,
Orange?
and people. Yeah, no, let me get the slide started. It's tumultuous and upsetting, but it's also creates incredible opportunities. And whatever new is going to start, it's not necessarily it's going to be bad. It's going to be different, and it may end up being better. So the optimist in me always tries to look for that sort of thing. So today, what we're going to do is we're going to kind of, and I've done this informally, but formally we'll go through sort of how I work my process, which is I start from the cycles. Like, what are the big trends from the bigger cycles, smaller cycles? What are the trends? Then what are the fundamentals that support those trends, or that sort of are in the path of those trends? And then go to the technicals. And so we'll run through all that real quickly. I know we got a half an hour, so we're going to hustle. The first thing we start with is the overriding cycle, which is the big cycle, is the Epoch cycle. It's a 400-year cycle. This is the Great Reset, not what the bullshit that the WEF is talking about. This is the Great Reset. That's what's taking place. We're in the end of that cycle. If you keep this cycle in your mind when you're watching events, it makes it less traumatizing, less confusing. You sort of understand where we're going and what's happening. And what's happening is the loss of trust and faith in the institutions that organized and governed our societies all over the world is crumbling, right? And
I'd like to point out, I know you have a lot to go through, but I really am amazed that you pointed out that included the Fed. And what the Fed has done in the last couple of years, missing the inflation issue, calling it transitory, and now probably overkill, giving the economy chemo where, the cancer is gone, but the patient is dead, has me thinking about who needs these guys.
Right.
That really comes into my head. I mean, they constantly blow it. Who needs them? What are they there for?
Yeah, I agree. And this is the thing. If you can look at the events through this lens, instead of being panicked or confused or worried or all this, you start saying, okay, what are the opportunities, right? Where do the opportunities lie? If what Dale is saying is true, and I believe it's true, and I highlighted on the current screen, you see all the different organizations that have sort of fallen out of favor and have lost prestige and lost trust, and they continue to decay. The ones I highlighted this time are, I think, the most important right now. The Federal Reserve, as Dale said, the Federal Reserve has lost credibility with the markets. And a perfect example of what just recently happened, not just the Federal Reserve, the Bank of England, right? The markets laughed because they were doing QE at the same time they were raising interest rates. In what bizarro world does that make sense?
Yeah.
And so this is how it happens. It happens gradually and then all at once, and just like everything in the markets. So watch the Federal Reserve and the central banks around the world continue to lose credibility, because remember, a decade and for the last 13 to 10 years, a generation of investors have relied on the Fed to play the markets and get good returns. That's over. And if you don't realize that, you're going to get killed in the markets. That's over. What I'm really interested in is the next time they ease dramatically, what's going to be the market reaction? Is it going to be some sort of pop and drop because people don't believe them, they don't trust them, they don't think they have credibility? I don't know, but it's something to consider. The other one that I highlighted on here, the thing that happened in the UK is going to happen all over the world. Pension funds are going to be the problem. Retirement systems are going to be the problem. They cannot meet their obligations. They're in trouble. They're insolvent. And it's just a matter of time now before they blow up.
That's going to be a bailout, isn't it, Ben? I just can't see government not doing anything about millions of people losing their pension.
And you know what, Dale, I think you're right. What it's going to be is it's going to be the justification for this central bank digital currency and this UBI and all this.
Yeah.
Okay, you're not going to get your pension, but we're going to give you money every month and make sure you can, eat bugs.
Right.
I mean, you can sort of, again, when you look at it from the view of the epoch cycle, that everything is deteriorating, you see how the pieces of the puzzle begin to fit together.
Yeah.
So,
what kind of bugs do you like, buddy?
Steak bugs. Thank you. So the epoch cycle, right? If we lose faith in institutions, what are the ways we can play that? What are the instruments we can use that are going to be beneficiaries of that? Gold, silver, precious metals, hard assets are where people go when they lose faith in the paper. Right?
Technically, do you think last week was the beginning of it?
I do. If you look here on the gold monthly, this bar right here where we took out these lows and we took out support, what was really good support. Almost, if you go back and you look at your commodity charts long term, before they make a big move in a commodity, they'll take out all the lows, grab the stops in the other direction, and then they go. And I think we may have seen that move in gold. Now, I know people are worried about gold and the dollar and, how are commodities going to go up? How's gold going to go up with the dollar? Go back and look at the 70s. Gold and the dollar went up at the same time. Gold and the grains went up at the same time. And the dollar and grains went up at the same time. The dollar and gold went up at the same time. So they're not mutually exclusive. You have to look back at a similar time to see what potentially could happen or what is more probabilistic to happening this time. So gold is one way to play the epoch cycle. Silver, another way to play the epoch cycle.
Boy, does that look good.
I mean, if you look at these charts and go back and look at your monthlies, and you see, they're pulling back to the breakout areas from multi-year bases in a lot of these commodities. So and we're going to talk a little bit about that. This fear of demand destruction is going to destroy them, just like in 2000 and just like in 2008 and 2011. I think it's a little misguided. Now, this next one's a little controversial, and let me explain it. I am not a crypto guy. I'm not a Bitcoin guy. I'm not a hodler. I'm not one of those people. But the asset class certainly fits the epoch cycle very, very well.
Ben, I finally came around to that. And I'm actually thinking, especially with the CBDC coming out and it sounds like you still think the dollar can go. And if there is any kind of, the dollar trend reverses, I think that this is going to be an asset class that people are going to go to run away from the dollar. I think they're going to buy everything. I see guys selling shares of farmland online. It's an interesting site where you could, and then I saw a guy on CNBC where they're standardizing diamonds in these little coins. They're actually in the coins in bars where they're going to be, and boy, does that remind me of the 70s. Everything, gem guys, they were all, people just wanted tangibles. They wanted tangibles. And
I think it's happening again.
Yeah, and Bitcoin, you look, it's hard to carry, 50 pounds worth of silver, 100 pounds worth of silver, but Bitcoin, gosh, you put a little thing in your pocket.
Yeah, just put it on a fob and walk.
Yeah, portability.
Yeah. So I don't think the clean out in that space is done. I mean, the excesses in cryptos were just off the charts.
Where's your box? 14?
No, it's about from about 8 to 11, 8,000 to 11,000.
Okay.
And I think that's where we're headed. I mean, listen, in the beginning of this year, there were 18,000 different crypto coins. 18,000. I think there's probably even more now because people keep trying to bring them out. So that whole froth has to get washed away. And when it does, I'm not saying buy Bitcoin, but because I don't know that they're going to be the leader, but you got to look for something in that space because it perfectly fits with losing faith in an institution we've relied on for decades. Exactly. So I think the cryptos is something you want to look at. You want to find the ones that are going to be the leaders. You don't want the Yahoos or the pets.coms. You want the Amazons or the,
you want the blue chip.
You want the ones that are going to come out of it. Just like in 2000, there's certain companies that came out of that internet debacle and, the rest is history. So that's the kind of opportunity that's probably coming there.
Okay.
The other cycle,
first time you've talked about it.
I was reluctant to because I'm not one of those guys, but it fits.
I'm not either.
It fits the cycle.
Right.
It does fit.
All right.
So this is the cycle, Dale's favorite cycle, brings back memories for childhood for him and me. The 70s to today were connected. We've gone over all these sort of things. I just show it because it's really important because you guys were talking about it this morning with a great discussion about, hey, it's all one trade. It's all about getting inflation right. And if you don't recognize that this isn't 2008 or 2000 where there was no inflation, it's more like the 70s where we had really, really high inflation. You're going to get carted out of the market at some point if you don't get inflation right. So we have Nixon connection to Trump, Cold War connections there. Even Russia's coming back now, which is kind of interesting. The ones we're looking at now, because Jimmy Carter and Joe Biden are like twins separated at birth, it seems, we have a lot of similarities. The thing that I want to focus on here is the Fed being massively behind the curve. And the narrative that's starting to creep in that is going to allow risk to rally, and why we've seen this 6% rally in the last couple of days in the S&Ps, is they think, oh, they're not so far behind. They're going to ease up. They're going to take it easy. If the cycles sort of evolve as I think they're going to, they're not close to being done because inflation's not close to being done. And we'll go over why. So how do we play this? How do we take advantage of this particular cycle? Last time I was on in August, I posted this analog of, I called it the Roe versus Wade analog because that decision had just come out. I believe we're similarly traveling the way we did in 73, 74, more so than 2008, more so than 2000, which you see all over FinTwit, because of the difference in inflation. When we were talking, we were right about here last time. I think we're here now. I think we're heading here.
Okay.
In the S&Ps. We'll see.
Okay. That looks deeper than 3,100. It's
in the 2000s.
Okay. And that's August. You're looking for this is based on your Epoch Cycle, a low due in August 2023.
It's actually not the Epoch Cycle. This is more the connection with the 70s. So it's the cycle connecting to the 70s. So it's a 73, 74 connection.
Analog. Okay. It's an analog.
Yeah. It's an analog, and they can stop at any time. The key thing about the 70s, and because if the analog doesn't work, it doesn't mean, the cycle's not working. It's just playing out differently. The key thing is the background frequency of the 70s is the same as we're experiencing now. So the probabilities are we're going to have inflation. The probabilities are we're going to have weak risk markets. The probabilities are we're going to have higher interest rates. It's not guarantees, but you want to stack the odds in your favor, and that's what I believe you're doing when you take this into account. Okay. Now let's talk about the fourth quarter theme. On the lead-in slide, the sort of table of contents, it said winter is coming. Winter is coming, not just in the seasonal aspect, but economically. The reason why the inflation is going to be sticky and probably higher than most people think for longer is This background weather of economic limitations and shortages is going to continue, not just in the fourth quarter, but probably for 3 more years.
Wow.
And that is why it's going to be difficult for the Fed to ease without causing hyperinflation. It's going to be difficult for central banks to be accommodative without causing hyperinflation. So this is a key point. If we get inflation right, you're going to get bonds right, you're going to get equities right, you're going to get the dollar right, and you're going to get commodities right. So you got to get inflation right in this cycle. So am I looking for things where it's going to pulse, because that is part of the cycle, meaning it's not going to be straight up, every month higher inflation or steady. It's going to come down a little, it's going to go up, it's going to come down, but just like a growth stock, it's going to trend, and it's going to trend higher. So we have to watch that, and we have to be looking at the fact that probabilities favor. They're going to have to keep the monetary policy tighter and higher, interest rates higher than most believe, for a longer period of time. The next
I think
one,
communities should get together, and organizations, and build a silo and get long one futures contract of wheat, 5,000 bushels, and take delivery of it.
I think you're right. And
people would think that's lunacy, but especially if you could bring in people that would know how to store it and know how to refine it and turn it into product, that would be kind of a great Joseph strategy for people to have going into the end of the epoch cycle. And it's not that much money. You think, say wheat's $8, 5,000 bushels, what is that, 40 grand for delivery? So, that could keep you going through a season or so.
And Dale, what you're saying is exactly what the epoch cycle is calling for, where less relying on the centralized, organized distribution system and saying small communities, small tribes, do it yourself. It's about the individual now. It's not about the collective. That's what's changing. That's going to be the major change on this epoch cycle. No more collective. It's every man for himself, and little tribes and little communities and individuals have to take care of themselves. That's what's coming.
Because if Putin does become desperate and launches some tactical nukes, there goes the breadbasket of Ukraine for a generation or more. Those fields will be irradiated.
And that brings us to the next bullet, right? Expect a crisis in the fourth quarter. I don't know what it's going to be. Could it be Russia related, China, nuclear, food security, political crisis? Remember, we got an election coming up in less than 30 days or 30 days approximately. Could it be political? Possibly, but some crisis is coming. Revolution. We're already seeing it in places. Iran, they have a revolution on their hands right now.
Yeah.
Sri Lanka, it happened. And again, it doesn't have to be a revolution solely about overthrowing governments like you're seeing in those countries. Could be a political revolution. Could be a revolution about how resources are distributed. Any of those things. The key thing is there's going to be a change of direction. And this ties in a little bit with the election. Change is one of the key things that's coming in this quarter. Big time changes. So the unknown of where those changes are going to take us is also going to be present. Markets don't like uncertainty. We are going to have massive uncertainty because we're going to be moving in directions and to places that we haven't experienced in a long, long time. So what do we do?
600 years.
What do we do?
Well, it's 400 years, right?
400 years. Yeah. So what do we do? Right? We're in an inflationary bear market. These are the strategies that you have to employ if you want to have success in an inflationary bear market. You hold higher levels of cash, you sell risk, you sell bonds, you buy real assets, because the goal is to have lots of cash so you can buy things at bargain prices at the market bottom. And that's sort of the rising from the ashes. That's the thing we're looking forward to, right? It's not the end of the world, but it's going to be the end of the world as we all know it. So there's going to be something new, and we want to have cash, not only to take care of our families, but we want to have cash to be able to buy assets at lows. That's the goal of this game. Here's an interesting cycle that I wanted to share with everyone. It's a 198-week cycle, approximately 4-year cycle that looks and identifies when financial stress hits the economy. 2023 is looking pretty brutal because it's right here. It's where the stress is going to peak out. End of 2023, early 2024. So again, it's just another indicator of a cycle that's pointing to next year is going to be a tough year. If you are trying to buy risk or take risk or do things that are against the cycles that are sort of stacking up from a major cycle like a 400-year cycle to a 50-year cycle to a 4-year cycle. It's not going to be a great year for financial
assets. If you're
assets.
positioned in the right things, it could be a bonanza year for you.
It could be fantastic.
Yeah, so that's what I'm planning on.
Yep.
Bonanza. Dun, 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 dun.
Another 70s reference, bonanza.
Yeah, I didn't even mean it.
There you go.
Anyway, all right,
So-
go ahead, Bob.
Last time I was here was early August, and we posted this sort of path. We were looking for a high in August, bear market rally high. We got that. The next marker is a late December, early January low that will trigger another, what we believe is another bear market rally into February. And then that takes us down to the low in August of next year. So let's see how that looks on the charts, where we think we're heading. Right now, that's the latest best guess. 1900 ES in August. It doesn't look good.
Yeah.
Okay. It would be about 60% off of the high at 4,800. So a pretty nasty bear market.
And the low, where are those lows coming in? How far back are those lows on the left side?
Here, this is like 97, 98. There's 2000. There's 2009.
Okay.
So these lows would be, if we came into here, would put us in the range of the 2014, 2015 highs.
Okay, because the 2000, 2008 highs, I think, were 1550.
Yeah, they're down here.
Yeah. Okay.
Right in here.
All right, so it's not the end of the world. We're just
not the end of the world.
Giving back 40 years of gains. That's all.
Wait till we see the bond chart. You talk about 40 years. Here's the NQs. I mean, NQs, you're looking at potentially 5,200.
Yeah.
That's where a lot of the excess was. So it's probably gets whacked a little more there.
Yeah.
Here's bonds. It's not often you get to mess around and play around with a 40-year or 50-year trend line. This is 40-year trend line.
Yeah.
We broke it.
Sovereign debt crises.
Yep. We broke it, tested it. And now we're sitting on really important support here.
Yeah. If
we lose that, it's par. Area of par is next on a 30-year.
Yeah.
So much higher interest rates. This would coincide with higher inflation and higher interest rates. So this is why, man, that getting inflation right is key.
Yeah.
Here's the dollar, the Dixie, sitting on really important support now. If we lose this area here, call it, give it a little leeway. Generally, you can have an eighth move here in the square. If we lose that, 107, 108 area, then you open up like 103 to 101. But again, even if it pulls back to here, Dale, we're just testing these highs. I mean, I think the dollar ultimately is, headed up into the 120s.
Okay.
That's the dollar.
We almost got there.
Yeah. So here's the thing I keep hearing from people is, just like 2008, we're going to get demand destruction. And, because prices are up, commodities are going to, the supply of the commodity is going to explode and bring prices down. And what cures high prices in commodities? High prices. Well, what if we're moving into a stage of hoarding, just like you talked about, Dale?
Yeah.
What if people start hoarding commodities so that we don't have demand destruction? That means that this whole thing of, oh, commodities are going to collapse dies, right? That narrative dies. So you got to watch it. It again and the key thing is the cycles are calling for limitations and shortages. It's not the environment for bumper crops,
right,
or
weather,
gushers if you're talking about oil.
Yeah,
it's not the environment for that. What about the thing that actually is happening? It looks like to me is supply destruction.
yes,
Look at the spending, CapEx spending of commodity producers.
yeah,
2008, it went up with price. 2011 went up with price. It's going down with price.
Yeah.
And it's not just in the oil patch.
mining,
Yep,
everything. Yeah,
here's some inventories for you. They're below 5-year median levels in almost every market. We already have shortages, and remember, if the cycle's right, the shortages are going to be around for 3 years. How do you play it? Copper.
Yeah.
Look at the pullback we had. Really sharp,
Nice.
strong pullback,
Yeah.
right on top of the consolidation, the multi-year consolidation that we broke out from here, over here.
Yep.
We tested it. Looks ready to
Held it.
go again.
Yeah, like it.
And the other
Held
thing,
up very well during risk off in the last 2-week period.
the other thing I wanted to say about commodities, and I told this to Dale a couple years ago, given my outlook, I hooked up with a firm, and I'm working with a firm, became a partner in a firm that trades physical commodities. There is a major disconnect right now between the physical world and the paper world in commodities. And these inventory numbers that I'm showing you and these inventory things are a part of that. The paper world is saying, oh, it's 2008. The physical world is saying we have shortages. Demand exceeds supply in almost all the markets we trade in, which are copper and crude oil and the derivatives of the oil.
Try and find some U.S. Silver coin pre-65. You can't find them in you could get other coins, different countries. You could get silver, but try and get your sovereign nation's silver. You can't,
or you're paying a 90% premium.
There, yeah. Well,
here's grain inventories.
But, 20.
Dale's idea doesn't sound so crazy anymore. Look at grain inventories.
Yeah.
Way below where they've been for the last 4 or 5 years.
Yeah, I think churches, every charitable institution should get long, December wheat of next year and take delivery.
Here's wheat. Does this look familiar to what copper and these other commodities done? Pulled right back to the breakout level, held support, and now we're moving up again.
Yeah.
How about corn?
Corn even better looking chart.
Better looking chart.
That double top. Wow, that looks great. Yeah.
Right. So corn's bullish.
Beans. Okay.
Oil. No, I'm not going to do beans. I'm trying to do less. Commodities here.
Yeah.
Oil is one of the keys to inflation, and it is ready to roll. Right. The supply issues in oil are off the charts bad because of the lack of investment in new wells, the lack of investment in CapEx by the oil companies because of their fear of being, if you look at their dilemma, they invest in oil, the government tries to put them out of business. They invest in oil and make money, the government takes their profit. Why would you invest in the business? You're just going to milk it for all you can, and that's what they're doing. The inventory levels in oil are really, really tough. My buddy in the business, in the physical oil business, Paul, told me last week, he said 80 is the new 60 in crude oil. Get ready for it.
Yeah.
And where are we? We're at 85. So are you buying near a high, or are you buying near what is probably very, very good support? Let's take a look. Here's crude.
Yeah.
Look at this pullback.
Yeah.
Right to the highs.
Right.
That we saw in, 2018.
Yeah.
I think crude looks good. I think crude is a higher number couple years and a year from now. Natural gas, volatile as hell. But again, look where the pullback came from. We made, we stopped where we should have, which is this is resistance until you get above it. But look where we pulled back. Resistance up here, right?
You saw it last year, Ben.
Yep. And this pulled back right to here. Again, right on top of the breakout level.
Yeah.
I'm seeing it in almost all the commodities I watch. This is a little thing we do each week for people that want to hear what we're squawking about. And that's my Twitter handle for anybody that wants to get in touch or follow me. But it's the bottom line we're looking at is central banks are attacking demand. And the problem with commodities is on the supply side.
That's right.
And right now, it looks like those shortages and issues on the supply side are going to be with us for quite some time. So how are we going to see lower inflation? And how is the Fed going to reduce interest rates or become accommodative and all that without blowing out inflation? I don't know. I don't see how they can do it. So
be a prepper, Ben Maldonado.
Be ready. That's what I'm just saying. Be ready, protect your families, put yourself in a position where we're going to come out of this on the other side, right? They're just like there's, a forest fire that destroys a forest, it regenerates. And that's what's going to happen again. If you have cash, you can not only take care of your family's immediate needs, but you can buy assets and you can be in a position to put things in at the lows and sit back for 20 years and let it compound.
I really wasn't looking forward to another Lazarus experience, but thanks, Ben. If you can rise from the dead, you could rise from the ashes. And, as traders, how many times does it feel like we look back on our career and it was almost a different life? And how many chapters we've gone through if we've been doing this for a while. So, Ben, thanks for, great work, because what you're presenting now, this is not new. You've been on this theme for many years, and we're getting another chance to reload here. So really appreciate you coming here and sharing the Epoch Cycle, which is one that not many people besides you talk about, and educating the F.A.C.E community. And what did you tell me on our call about being prepared? What's that saying? Preparation.
I don't remember. What did I say?
I don't know. Forewarned.
Oh, forewarned is forearmed. Forewarned
There
is
you go.
forearmed.
Forewarned. You've been forewarned by Ben for years. So, get ready. Thank you, Ben.
No problem, Dale. I always appreciate your time and the work that you guys do there at F.A.C.E. It's really good.
Yeah.
Really good.
Yes, and Paul, we record these interviews, and Ben will tweet it about 50 times. So
absolutely.
Catch it on Twitter. You're welcome, man. People are thanking you, Ben. And again, bro, appreciate it. Good hunting, and keep in touch. And we'll get back together in January, see how this year played out.
Sounds great.
All right, Ben.
Thanks, Dale.
You're welcome, buddy. My trading warrior brother, Ben Maldonado. Very good shoe. Yes, I think so. And you could join the team in 8 minutes. Okay, still time to get ready for the morning edge. And we'll see everyone tomorrow. Good hunting, and don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.